Hey everyone, it's Scott here with another daily property update. This is your 3 to 5 minute update every single day so you can get all the information on the property market and the economy so that you can be a property insider and make the right moves for you and your family. Now guys, I want to talk right now about where the property market is right now and some of the big forces which are all coming together, which are sparking off another property boom. One of the big numbers that we look at every single month is the number of new building approvals which come out from the ABS. Remember, supply, if we can fix supply, have more supply of property, this will ensure that property prices do not increase too fast and will also keep rents under control. So we need more rental supply, more rental stock, and more stock for first-time buyers to be buying into. Without that new stock coming to the market and with all of these demand factors creating more demand, more people wanting to buy, then we are going to see prices get out of control, okay? So the new ABS stats do show that we only had 15,000 new approvals come in for the month of July. Now, if I compare that to the target that we need to see 20,000. Now, 15,000 is actually around about an 8 to 9% drop off from the previous month. So the numbers are not headed the right way. Now, this is just 1 month. So month to month, it can change and it can turn around. But when we look at these numbers and when we talk around the industry and we look at the forward projections, we can see, guys, that we are going to get nowhere near 20,000 approvals every single month. That is 280,000 approvals we need every single year to have a fighting chance to complete at least 240,000 properties per year. Now, 240,000 properties is the government's target under the Housing Accord. Now, if you take a look at this chart, you will see at no time in history have we ever hit 240,000. So that is a pipe dream and will not occur. So we're looking at today a housing shortage of around 70 to 100,000 properties today. So we would need 70 to 100,000 properties on the market today to get prices under control and get rents under control. Not to bring prices down, but to hold prices where they are. However, when we do our forward projections, and this is coming from multiple sources, including our own projections, we are staring down the barrel of between 250,000 to 350,000 shortage in housing over the next 5 years. So let's take a look at what's actually happening in the market today. So Cotality put out the number of 0.7% for property price growth in the month of August. That is a lot, guys. I mean, if you annualize that, so 0.7 times 12, that's around 8 to 9%, 8.4% I think it is. So that is a lot of growth which could occur in a 12-month period. Now, Ray White actually put a number out of 1.3%, okay? Now that's a smaller data set that they're looking at and the data that they're involved in. But hey, 0.7, 1.3, these are very, very big numbers. And what we're also seeing here on the ground is a lot of areas and a lot of suburbs that our research has pinpointed where our investors are being placed right now. Prices have actually jumped between $15,000 to $60,000 per property in the key locations that we're directing our investors today. So the market is moving. So what's actually happening, guys? Interest rates are falling. Immigration is continuing. And in addition to that, the government has a really big stimulus package coming on the 1st of October, which is the 5% first home buyer assistance that they're giving, meaning a first home buyer can get into the market now for just 5%. Now, the problem with that is, yes, it's going to allow more people to get their first property because they only require a 5% deposit. The problem is we don't have enough pool of property for these people to buy. So what is actually going to happen is, yes, you only need 5%, but the prices of these properties that they are looking at, and typically a first home buyer can afford somewhere between $700,000 to maybe up to $1.2 million, depending on the capital city. Now, the issue is that there's not enough property in that affordable zone. And in addition to that, you're going to see investors attack that pool of property. Why? Well, one of the big reasons is because interest rates have been falling, most investors are also owner occupiers. So they might have a mortgage of $500,000, $1 million today. Now that mortgage holder who wants to become an investor now has, because of interest rate falls, 3 falls just in the last 6 months, they now have an additional $5,000 to $7,000 in interest saved on their main home that gives them free and spare cash flow. And a lot of them are deciding, okay, do I put that money towards a holiday? Do I put that money towards paying down my mortgage? Or do I actually utilize that money to go out and invest into an investment property? And many of them right now are attacking the investment property opportunity. This is reflected in the data. So take a look at this chart, guys. This is the number of loans being approved for investors. And as you can see, this is at a record high. Now, if I divide that by the average loan size, we're looking at around somewhere between 17,000 to 20,000 Australians getting pre-approved for a property investment home loan just within that 30-day reporting period. That is a huge number of Australians. This is almost 300,000 Australians a year that want to go out and actually get an investment property. So guys, this is where the market is at right now. You want to keep a close eye on the building approvals. You will notice, okay, that the approvals for houses is slightly up. It's the approvals for apartments, which are way down. Now, the issue is that we need to see the apartments and townhouse number increase. The reason for that is there is not enough new land to actually build houses to meet the housing target. You have to understand, when you have land, you've got to release that land. Typically, you're converting farmland on the outskirts of the city over into residential land. But this land requires millions and millions of dollars to turn into a housing estate. You've got to be able to put in sewerage. You've got to be able to put in electricity, roads. You've got to have a plan for schools, hospitals. You've got to have all of that there. And that costs millions and millions and millions of dollars. And that cost is paid for by the end buyer. So what you will see is that typically in these housing estates, the cost of those homes, 1/3 to 1/2 of the cost of those homes is in taxes, fees, surcharges, levies, infrastructure charges, okay? So that is one of the big blockers to new supply coming onto the market. And it's one of the big reasons why we are never going to hit that 240,000 completed target. Thanks for watching, guys. Don't forget, hit the like button, hit the subscribe button, and I'll see you guys tomorrow.